Hey, no audio, Ken. No audio.
Good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for July 18th, 2023. Turn the radio on and listen to the music in the air. There we go. So, we'll start with Alcoa, 30 minutes. We closed this one yesterday. I missed the perfectly organized short at the PSAR flip. Should have been able to make money on that one. There was a 1-2-3 entry on this leg. This is setting up nicely for a breakout in either direction tomorrow. There's a COTA 2 in both directions. So I like that we have a very clearly demarked upper and bottom levels to the channel with measured moves in either direction. Just span of control. When you see the Microsoft trade, you'll understand. AI, this is the one that worked. So we closed that one. This is a perfectly organized COTA 2. It opened down here. It went up through the dragon. The PSAR held firm. Bought it on the breakout above the dragon. Standard risk box. Orderly. Second leg up, could not get a new high. The R10 rolled over, so I took the dragon exit and got filled in the middle of the dragon for about 2R. And no overnight risk. Like that one. Caterpillar, the emerging dragon COTA 2, that's this whole thing right here. It held, so it was grinding up, so we just speculated in. It closed well, and today it just took off. Somewhere in here, on a better day, I should be getting a second position, and then right around here making a decision to hold it or not, because I have just one position on, and we're holding about 5R. That's an easy hold for tomorrow, and just trust the PSAR. On my best day, maybe what I do is add a second position here, cash one, and then keep one, and then just use that for a turbo. If you're going to do that on 30 minutes, you can also learn to do that on 3 minutes, as I'm going to show you here shortly on Devon. Takes a little bit of engineering, but it's probably worth it. This is a COTA 2. From yesterday in Cliff. It opened here, zoomed up, and I took a slow dragon exit at the PSAR. So I gave back 2 units and kept 1. So this feels like a bit of inefficiency, but I was hoping for some recovery. So I kept 1. Maybe that's a C exit. In this case, I think the dragon exit there would have been better. CVS. So this one was yesterday we closed a half an hour loss. Today it gapped up. I took the emerging dragon, standard risk. It did this, and I exited here. Then I watched it sell off into the dragon and then close really well. So right in here, I was in a quandary. Should I hold that overnight or not? And 4 times out of 5, the answer will be no, especially in something that's not driving the market. There's time to see that open tomorrow inside this risk box, and then if it breaks out, to enter here. So why take the overnight risk if you don't have to, especially when you see the size of the gaps that this thing routinely makes? I don't want to take that risk. So in CVS, it's more gappy than it is follow through. I mean, in that sense, but that one was a +1 and looking for something tomorrow. Dish Network took the gap up and go. There's your PSAR flip. I entered here. It rolled all the way up. Took the dragon exit, and again, kind of sloppy. Gave back 3 and kept 1, but it's 1. we I was talking with Luke in the Creativity 202 check-in today, and he's working on a mechanical system that is more concerned about what he gets on a reliable basis than what he doesn't get. And the idea was something like, if you lived in a small town and there was a road that led to the market, and there was a guy over here with an apple farm, and every day at 9 o'clock in the morning, he loads up his truck to the max and starts screaming around the corner to head over to the market to sell. And he's got his son driving, and every time he goes around that hairpin turn, because the truck's overloaded, a bunch of apples fall off, and Luke is standing there with a 2R apple basket, and as the truck goes by, apples fall into it, and he's concerned about taking 2R and apples to his house, and he's not trying to capture everything on the truck, because the truck has to go to market. In fact, if he stopped the truck and stole the truck or whatever, there'd be no apple trucks in the morning. So all he's trying to do is refine system rules that allow him to capture his 2R and go home. And it looks very promising. It has a system quality number around 3, no overnight risk. And the idea is that we're going to make that a core system, and then look for 2 places where the sniper can add value as add-on modules. And the first one that we're going to look at is the use of the sniper exit, and then only afterwards the sniper entry. The idea behind the sniper exit is that if you know what your average win is, and you know what average +1 SD win is, then you can just use your standard core rules to capture things that are in this region until it breaches into an abnormal gain. Then and only then do you invoke the sniper exit to come in and make sure that you are preserving more gains than just letting it come all the way back to the core rules. And we looked at a couple ideas, like one, if you just took the maximum favorable excursion and you know where your average +1 average win is, just keep half, give back half, and keep half, and you're automatically going to do better than simply the core rules, and you don't have a lot of extra computation to do, because the only time you activate that is when it has already exceeded an average win +1 standard deviation. So you're not always burning up mental energy. You can set an alert and bring in the closer when you have an exceptional gain. And the next version of that is if you get beyond the average +1 and you get to the maximum favorable excursion, you can then start thinking about having a specific sniper box, much like the RL10 or 2 of those or whatever, so that you only give back a certain amount of money from the maximum favorable excursion. And then you keep the extra piece between that limit and what the average +1 is. So the sniper exit is an excellent way to go from a core to an add-on module. And then you're not trying to work too hard trying to get sniper entries all the time, like adding that second position. You just wait for something that was already exceptional, and then you bring in your closer for that. So the extended discussion of that is in the is on Patreon and in the foundation, or in the Creativity 202 course. That's the kind of work that we do in Creativity 202, and you really ought to consider that course, because you get lifetime access to the material, and you get access to the hundreds of hours of previous coaching sessions from the previous cohorts. And if I just turned off that course now, that would still be an unbelievable value at the current price. The price is going to go up in October. My business consultant tells me I should be charging $10,000 a year for that, and that I should get rid of the lifetime access. So to which I said noted. So I'll be increasing the price a little bit in October to pay for my time, but I'm going to maintain lifetime access because I just think that's the right way to do it inside our community of practice. And people are continuing to add value all the time and are being gracious with their insights and their time. So it'll continue to be a lifetime access course as I speak today. Once we get the book published and I'm starting to get new clients from outside, maybe there's a special deal for you guys. But anyway, back to our regularly scheduled program. So this is Devon Energy, and what I want to show on this one is, so this is the 30-minute chart, right? And this is the 30-minute pattern, and this is the standard mechanical risk that we use all the time. And it did a PSAR flip. It was a COTA 2 entry, and it blew right past the gap all the way up into here and then held strong. Now, I'm still holding that as a swing trade because I think that's going to get people's attention. And if it can break above this hump of the dragon, above 51.50, I think there's a real good chance for it to go. So I want you to notice that the move from about 49.40 to 51 is about $1.60. That's almost a range stat move. And there are opportunities when that's moving along on the 30-minute swing to say, you know what, if I was ever going to be a sniper, maybe what I would do is have a 2R battle drill that enters the second position here on the 30-minute chart and just live with that. Then maybe sell one and keep one overnight and then take advantage of that extra gift because I can. So that's one way to exploit an abnormally good move. It gets past 2R. Another way to do it is to drill down to the 3-minute chart and then see what I can do down there with some engineering. So I'm going to jump to that right now and talk about the sniper trade of the day because I just think this is a good lesson for you to hear. So this is the entry that came from the 30-minute chart. So if you were just a 30-minute chart entry guy, that's where you'd be getting in, not even consulting the 3-minute chart. And you notice that, oh, this thing just blew out the Red River, which had compressed and then is exploding upward. And then this is that standard risk box from the 30-minute chart. Now, as a point of reference on Devon, the range stat on this is $1.71, which is this orange. That's a range stat move, which is the maximum reasonable intraday move, the range stat, which is the average range of the last 30 days plus one standard deviation of it. Now, this is what I call my risk divided by 3. So my risk turns out to be the larger of yesterday's range, or 1 ATR. And for intraday trading, I just make a standard, hey, what's 1/3 of that? And that's what my risk is. That's the range risk divided by 3. And as a point of comparison, this is the R10. Now, it turns out that my risk is often close to a frog box, but I want you to see that the my risk is about 2.5 times the size of the R10. So this is a very comfortable, manageable risk on a 3-minute chart. In fact, this is manageable on a 30-minute chart, that risk. So on a 3-minute chart, it's actually pretty easy. And on a 3-minute chart, you'll just notice that that move was supported by the PSAR all the way up to here before it ever even flipped. So now what I can do is I can take, I make this a stamp in snag it so that I can easily scale it so I can see what I got. So this is 1 unit of risk from my risk, which is about, I want you to notice that that's about 0.3 of a range stat. So if you use the range stat as your 1.0 win or loss, then this little manageable risk right here, which represents noise, because I don't get a signal to get out unless this thing violates below that level on a technical basis. So there's no temptation whatsoever for me to exit inside this region at all. I'm never second guessing that, because that is the definition of noise. And if that exit triggers on a PSAR flip, that's only a 0.3 loss. And I know that the range stat move off the low could get me up into here, which it did. And I know that using that side gives me a 1, 2 to a 2R. So I've got a 2 to 1 ratio comfortably before I even get to the range stat. So I'm not tempted to get out of this unless it really genuinely shows me a price that violates the PSAR, and then it's only a minus 0.3 loss. Well, what if I exited here when this rolled over and I took the dragon exit? Then I have 2 units of risk. But remember, when I score that against a 1.0 range stat, this little loss would be a 0.3, so a win here would be a 0.6, which makes this a 0.7 win by the time I finally got out. This is where the PSAR was flipping on the 30-minute, so that was a very orderly move. My point is that if you become accustomed to 0.3 losses and 0.6 wins when you get a 2R, then you're never under pressure because you're just trading in fractions. And it's not until you get a really strong win, like 1R or 2, more than a range stat, let's put it that way, that you could then activate the sniper. Or if your average win was 0.6, and plus 1 standard deviation was another 0.3. So after you get a full 1R move in hand, in other words, if it moves more than a range stat, then and only then activate the sniper, because you're bringing him in for abnormal volatility. What this will help you do is prevent you from having a frame of reference that says, here's my PSAR flip, and that represents a logical change in trend. The trend was down, and then price started moving up, and then there was enough so that the PSAR flipped, and now I have an upward trend. That is an upward trend until the PSAR is flipped. So if you make that your risk box for execution, you would be correct, because you are entering as it's going up at the start of a new trend. So any exit that is inside of this region is by definition noise. So there's no information in here at all about the change in trend. The change of trend is like the flipping of a switch when that PSAR flip level is initiated and you get a collapsing dragon. Now, I'm guilty of just telling you, hey, you should never take more than a 1.0 loss. So if you make the execution a full minus 1.0 and you are anxious not to take a more than 1R loss, then if this started to decay, you could be tempted to exit inside the noise. And now you're defeating the purpose of having mathematically rigorous definitions of trends and price levels. So what I'm telling you is make this a minus zero point 0.3 loss. So even if it hits the collapsing dragon, you're into the trade that you want, and you can take minus 0.3R wins all day long. Well, why is that? Because your reward manager thinks differently than your risk manager. Your risk manager is vitally concerned to never take a loss greater than 1.0. So if you use this structure, you can tell him, hey, just calm down, Skippy. The worst trade you're ever going to get is a minus 0.3, and you only take that if this thing starts failing right away. But if this thing is starting to move up and the PSAR is rising, you're not even going to take a minus 0.3 loss. It's always going to be that or less. So have no fear about the 1.0. So don't bug me if it's inside the noise. Don't bug me if it's inside the noise saying, hey, you better exit now so you don't take a 1.0 loss. Just chill out, dude. That's just going to be a minus 0.3 loss. Well, what about the upside? Well, the reward manager already knows that a reasonable upside move could be as much as the range stat, which in this case is 3 to 1. So you give it 1 as the move off the bottom, and then if you can average 2 execution boxes, this one got there without even looking back, and then you locked in the 2R battle drill, you've already got a 2 to 1 reward to risk, but you're not under psychological pressure because you have about a 0.7 win compared to a potential 0.3 loss. Just remember that you have 2 different brains. You have one brain that's optimistic, that's looking at rewards and mathematics and can only see the upside, and then you have a long-term risk manager who's operating out of your stomach and intuitively, who's worried about the next 200 years, and you don't want to lose your mind, and you say, look, I've got you covered. I respect the fact that you don't want to take a minus 1 loss. So what we're going to do is we're going to frame that as a 0.3, and your reward manager says, I don't care about that because I'm not taking the loss. All I need to know is how many shares am I going to get based on position sizing against a full range stat. And whatever the number of shares is, whenever I make winning trades, I'm making money. And then if I want to increase the number of shares, I just increase the number of dollars at risk per trade. I never change the range stat and the architecture that gives me this as a 0.3 and this is a 0.6. I just increase the number of dollars at risk per trade, like from 10 to 25 to 50 to 100 to 400, however far up you want to go. And then you use evidence of successful trading in order to increase the dollars at risk per trade. But you never change the geometry and the architecture of the trade because you're accumulating evidence of what's working in the numbers of successful trades. And then you can apply the histogram treatment to it, and then you'll see, hey, I'm never taking a trade loss greater than 1R, and I've got positive expectancy between -1 and +2, and then I have a few fat right tails that are paying for all the vacations. So this to me is a clear expression as illustrated in this chart on the sniper trade of the day. So Devon Energy, this was a routine 30-minute entry, and all it did was just kept going. And if it hits the 2R battle drill, then you could think about adding a second position or not, or invoking the sniper trade. Now watch what happens if you take the R10 rollover and then you end up getting this exit right here, and you get that trade in this amount of time. And then if you stick around long enough because you're hoping to get more, you only get this extra little piece of green for all this extra time. So if you want to talk about the time value of money, That's your trade right there. And then go golfing. Or add a second position here and then get an extra boost and then take that exit. Now you get an extra piece on the second position. And now you could exit here instead of here. And that's what the sniper can do with everything that is better than 2R. So just use the 2R execution risk as the place where you begin thinking about adding the sniper. And now you're only working hard on things that are already well above average. And so you're saving all that cognitive effort. And you're just letting routine things routinely happen. And then look how good the PSAR exit is for you. Anywhere in this place here, if it starts to fail, you've got, you could even decide, hey, here I want to jump to no lose plus dinner for 2, and then pick up the PSAR like that. And then you'd be happy because you locked in a wedge of gains. You got to make one decision, I think, on this trade, and that's when to go to no lose plus dinner for 2. And I would do that right about here. You could just take that and move it right to there. And then decide, you know what, I'm just going to use the PSAR and exit there. This is where the PSAR exit was on the 30-minute. So this is what you can do with turbo trading and sniper trading if you want to go down to the 3-minute chart. If you don't, you could just stay on this one on the 30-minute chart and simply use one, two, add your second position at 2R, and then take the dragon exit right there, and now you got 3R on the first trade and 1R on the second one for 4R, and you just stayed on the 30-minute chart. And then look how good this is where the final exit of the day at the PSAR was, but you really could take that here. Now let's, just for grins, let's put a yellow dot on this boy and say, what does the 30-minute dragon exit look like? Because I know where that is. What's that look like on the 3-minute chart? That's where the 30-minute sniper exit on the dragon exit looks like. And truth be told, that's not much better than this. Or if you had added a second position like here. But that's a pretty relaxed way to make that trade. So I wanted to stop at this moment in the 30-minute hybrid trading to show what can be done and to teach that lesson again about the execution R versus the position sizing R. I strongly recommend, if you're an intraday trader, for the reasons I just articulated, use the range stat as 1.0 so that you can quiet the inner anxiety that makes you want to exit inside the noise. Remember, if you're going to trust the PSAR, you don't want to make that a religious experience, right? When that PSAR is coming down and then the PSAR flips and you decide that that is going to be the basis of the risk, and you say, that is the price level that gets me out of that trade and into the collapsing dragon, instead of making that an existential threat of making that a -1, just make this a -0.3. And then as long as you can see two chunks of 0.3 and 0.3 to the upside, you've got a 2-to-1 justification for taking the trade, and that's easy. All right, back to 30-minute bars. And so, in conclusion, on Devon, we ended up taking the exit over here for 2R on a single position. And actually, I have to make that a little bigger so you can see it. All right, so there's your sniper exit at the edge of the dragon, or as we like to call it, the dragon exit. Okay. Yeah. Hey, Bill, if you put that chat to me in the public area, then other people can see that, so I don't have to. All right, Electronic Arts, no trade, although that was tempting at the PSAR flip Kata 2. Emerging markets, no trade. Ethereum, I took the Ethereum. I took the SSC. I really liked this move from here up into here, and then it gave back 2 legs down, but this held pretty well, and so I tried the SSC. So that's an SSC. This is my standard risk inside each. Now, could you put that here? Yes, you could. And you could have cashed a 2R or a 3R win right there. If you just want to take 3 and go home, you can do that. Probably should have done it. But I'm still holding about 1R in the overnight. Mexico. This is the, let's see, let me put that so you can see the, the yellow box is the start of the day. And this was a Kata 2 as soon as I could, and it's holding 1R into the close. Brazil, I cashed the 1, 2, 3 entry from yesterday. It closed well. It rolled over. I took the dragon exit for 2R. Intel. So they got me on this one. So here was the collapsing dragon short, which we closed and then stopped and reversed with a standard risk. Yesterday added a second position near the close. It closed well. Today it gapped and started to go, and I took a fractional loss on the second position. And then on the Kata 2, I re-entered 1 position with standard risk and holding +1. So they got me on this one. I was a little slow to get out. But I really like this overall because it is holding above this RL10, and we got rising RL10s. So this all feels up. IP, no trade. Real estate. I took the intraday short on the collapsing dragon. This was one of those, I watched it open here and then just sell off that much. As and there's no resistance over here. This is where the collapsing dragon actually could have been taken, and I felt like I was late getting in. And then it stabilized. The R10 reversed. Winter became spring. Took the dragon exit for +1. KRE, the regional banks. So here was the Kata 2 yesterday. Gapped up and went. Added a second position. It closed really well. So let's go. We're holding 1, 2, 3, 4, 5 on the first one. 3 on the second one. And put a stop here. If that goes up tomorrow, I'll put a third one on in turbo and let's go. This is Mattel. So yesterday we initiated the Kata 2. It ran all the way up. I took the dragon exit for a fraction. It fell through the collapsing dragon. I took this short, and it just, the bottom dropped out of it. So that's holding +3. And I'll put a stop right here to give back 1. You know, and then in the long run, there's still a lot of joy. Now imagine if you had a directional bias and you had your 3 positions here and you were just going to hold it because you were sure that was a buy on dip and a buy on dip and a buy on dip. And if you had given back that much on 3 positions, you'd be pretty sad. Whereas we just take the indicated exits at the PSAR flip. We're ready to get short on collapsing dragons, long on Kata 2s, and short on collapsing dragons. So don't have a directional bias. Drive your car on the road based on what the traffic is and where the road is going. Follow the road. Follow the signs. You know, don't drive into a ditch. So this was McDonald's. Yesterday we decided not to take the overnight risk. It collapsed and we missed that one. Today it gapped all the way down to here and then rocketed up. So I took the entry this much off the bottom. There's the standard risk. And then it ran all the way up and then came all the way back down to here. That was enough to take 2R. And then the whole rest of the day was a rocket ship. This thing's going to be in play for tomorrow. I just couldn't handle the volatility on the 30-minute, and I was working on Microsoft as well. So a nice gift in McDonald's. Merck, we closed the short at a scratch or a fractional loss. Microsoft, beauty. So they got me on the first one. We tried this yesterday, and it closed really well. It sold off, so I took the 1R execution loss. And then about 2 hours into the day, it did this and blew through that PSAR flip. So hold my nose, buy it, and then bingo. And just take the take that on the intraday with the dragon exit is about 6R on 30-minute charts. I'm not going to go through a full workup on this like we did with Devon, but this is where those entries hit. Now, because of the way TC2000 draws, that's where that entry is, and this is where that exit turns out to be on the 30 minutes. So that's a pretty nice trade, and you should be able to realize inside here that you've got opportunities for 2R battle drills here and here and here, and then a turbo trade that just exploits that little piece of the move and done, and then just let the 30-minute trade do what it does. And again, you don't have to drill down to the 3 minutes to play that. I mean, you could do that on a 15-minute, 10-minute, 5-minute. You know, there's ways to play this at accelerated time frames. Just showing you the flexibility of the 30-minute. Marijuana, yesterday we closed it, and then today there was no follow through. Nvidia, beauty. So this is the flexibility, I guess, of a one position, and it closed really well here. Because I didn't have 2, I was able to ride that out. Missed a emerging dragon 2R battle drill here, but that closed really well. And holding 4, and if it breaks above this 5-day high at 480, I'm adding another position with markets money. So I really like the chips. Clean Energy, no trade. Rivian missed the early morning trade. The S&P was just strong as could be today. New 10-day high, 30-day high, and closed very well. Treasuries actually had a reasonable move. Tesla. So remember yesterday they got us on the run up and then scratch and then re-entry and closed well. Because I've only got one position in, I can tolerate that, and it closes well. Now I can think about raising my stop to here. You got to give them some room to breathe early in the life cycle of the trade. Now U.S. Steel. Yesterday we closed the SSC and therefore missed the big move here. But that's that. So that was the 30-minute hybrid swing. I'm not going to recover the sniper trade of the day, but that's one that I would spend time on. I'm going to extract that out as a lesson and make that a separate lesson in the foundations course, because I think it's one of the clearer explanations that I've given on this. And again, you can see from I'm using TC2000 to do all these computations for range stats and my risk divided by 3 and the R10s and all that jazz, the reward to risk ratios, and so forth. Let's go to the traders today. Here's Bill. You want to go ahead and talk about these? Let's get yours up first.
Yep. So this is pretty much what Ken was describing in his thing there. This is exactly how I do it in the sniper classes that I teach. But I use a trailing stop, which is represented by the red up there. That little red box just says I'm only going to take, the MMRB maximum. I didn't have time to even put in my updated trailing stop because of work. So it got all the way to there. The other thing I want to point out is just below where he's writing the sniper, my exit is typically in that candle right there. So at worst, I would scratch. Well, yeah, I wouldn't scratch, but it would be right there. If you were just holding the one and wanted to see what happened all day, once it got there, so you're really getting about the same excursion that Ken would be showing you.
Yeah,
in Ethereum. And this is in Ethereum, by the way.
So in the blue, this is that RL10. A little
Right.
easier to see. And then you put a 3-period
Exponential moving average.
exponential moving average on that. And then when that pinches, that
Yep.
tells you any weakness you get out in here.
Yeah. So sometimes, now as you can see, it'll still let you explore a little bit, let you give back a little bit and keep going because you want to be with the trend, right? But on those big excursions, like let's say it didn't do the dragon horns back there at the red, I have the trailing stop in there to capture outsized gains because I don't want to give that back. So those are my two little insights for you.
Yeah, the sniper trailing stop of that MMRB here allows you to be aggressive on getting the second position in at the 2R battle drill. And then you get a surprise move to the upside. You get that surprise move in the first bar. It doesn't make a new high, and then this thing starts rolling down. Bang.
I want to give that back. Yeah.
Bang. Now you're out here.
4.6.
And now you can capture this, and this.
It's 4.6 for the day. So then, at the same time I executed the initial position, my next slide will be, I also put one on the 9-day.
Yeah, so
because
this is 30-minute.
Yep. So that's really what you got a lot of time to think about it. But I had actually left for work at
Yeah.
just
So,
after the
so let me make
like
this.
12:30.
Let me make this point. So you just saw me do a 30-minute, 3-minute core and turbo.
Yeah.
What he's getting ready to show you is 30-minute turbo and 9-day core.
Yep.
So he's using the 30-minute for his aggressive moves.
Right.
So now when we go to, so
Yep.
this is Ethereum, and
Yep.
that's your hold your nose entry.
Yep. So I get one right there at 11:36 because I quickly flipped over to the 9-day and went, oh, hey, this just now turned into summer. It's ready to go. Right? It just broke out. And if you go all the way down, it just broke above the -50 line, which is also significant in the way that I look at stocks, right? Or the way that I look in vehicles.
And right here's where it
That,
turned to
yeah.
summer, and it
And that
cleared.
summer means that it's now pulling away from the Red River in the MACD. That's pretty much it. So that's how I use the 30 to and the 90 together. Sometimes I will put 30 to 3-day. I didn't hear because I was looking for. I will typically trade this in my self-directed IRA, so I'm looking for longer term signals because that's all. I can't trade in that as often as my.
Yeah. So I use the
periphery.
30-minute for my core,
Yeah.
and 3-minute for zooming in. He's
Yep.
using the 9-day and a 30-minute for core and turbo. So
Yeah.
technique.
On full trading days, I also apply all the same stuff to 3-minute. I don't usually do lower than 3-minute, but 3-minute, 5-minute, and then 30-minute charts. That's my day trading. Today was just get stuff set up and go to work because I was nursing all day from 12 o'clock on.
So I'm using that pair for core and turbo. He's using that pair, but
Yep.
because we're dealing with fractals,
Doesn't matter.
it's all the same patterns.
Yep. Works everywhere. That 30-day, 9-day works really good with mutual funds, by the way. If you're interested out there in TV land.
All right, so this is Damien. This is spiders on 1 minute. PSAR flip. Standard risk box. Exits. Caught at 2. Clears the emerging dragon. Standard risk. Two and a quarter. Check. Notice the summer, fall, summer. That's why that's a good entry.
Ken, I have a question.
Sure.
If when I look, I reviewed this afterwards, and I thought maybe I took the second trade too late.
Nope.
Would it have been possible to enter it when it broke above
No.
the dragon, either of waiting for the entry where I
Yeah,
was?
yeah, you could. I mean, I like to see this, the RLXD on 1 minute chart.
Okay.
Yeah.
And, you know, if you said, look, I want the price that's going to get you out is a break of this.
Yeah.
Which means that if you get an entry here, that's the size of your noise box. So if you get in earlier, this is what you got to do. If you decide to get in here, let's say right there, and then you draw your execution price level is still this.
Yep.
So you have to get, so your your standard risk box, like right, would be this, but that doesn't mean that you let it come all the way down here before you get out,
Right.
because the price that invalidates your hypothesis. Remember, this is a hypothesis that this thing is a kata 2 and it should go. The price that invalidates the kata 2 is a violation of the PSAR. So if you get in here, that just means that's how much slack you have. So you're really trading tight. Now, don't you have a standard position size when your risk is this big? Let's call that 100 shares. Whatever. Just because you cut your execution risk in half, don't make that 200 shares, because this one is more likely to fail. Why? Because you're entering in the noise.
Okay.
This is the beginning of signal. So don't make that 200 shares just because the risk box is half the size. No. That's my point earlier about position size off a range stat.
Yep.
Use that to drive the number of shares that you buy for the numbers of dollars at risk. And then you can decide, hey, my execution risk was here, my execution risk was there, my execution risk was anywhere of those. None of that affects the number of shares that you're going to buy, which is position sized off of the full range stat. If you take those earlier exits with tighter execution risk, all you're doing is front running, but with greater uncertainty. If you are doing that deliberately, then by all means. But where you are right now at 2 1/4 on this geometry, why would you change that?
That's the reason why I'm asking.
Yeah.
Because I was talking
Yeah.
to a colleague who is not part of your program, but he's a professional trader.
Sure.
And we were reviewing today this chart, and he was saying, "But why didn't you take it beforehand?" And I told him, "But it's riskier." And I just wanted to have your opinion.
Yeah. So this, just remember, that is the price level that gets you out. If you buy it here or here because you have the RLXD, just realize that you have smaller room for reversals,
Right.
and you must get out here, even though your standard risk box would have put you down here. On this one, you waited for the risk box to fill out completely, and it was also technically above
The new high of the day.
Yeah, here's why you have more confidence.
That's why it's good.
Not because it moved a risk box off the low, but because it broke higher than the previous peak of the RL10.
Yep.
That is a statistically significant price level.
Okay.
So when this breaks,
Yeah.
this
I
is
was
new
out.
information.
Yeah.
This is not new information. You're entering in the noise. This is a coin flip. But at this point, you got new information that maybe
Yeah.
that trend is going to continue, which was part of the hypothesis of the kata 2.
Right.
Yeah.
So that new high of the day, and when you and I went over this months ago, that's
Yeah.
I say, hey, when we're ratcheting that stuff up and it rolls, I immediately put put a line exactly like you did on the high of the day. Once that breaks up, that's new information, just exactly like Ken said. That is a standard re-entry.
This is where it failed twice. It failed here, and now it failed here. So if you enter in this space here in the pocket,
You expect it to fail.
you're not surprised if it fails, because this would be part of a new 1, 2, 3, and now you got this move, which looks like that move, which means it's coming back to here. So the reason you get out here is so that you can be short. So if you
Yeah.
entered, you would take a smaller loss, but there's greater uncertainty. So I just wait and see if that breaks. That's going to be a good enough trade. You
Yeah.
know? And that's a good enough
Trading
trade.
in there, yeah. Trading in that risk box is
Crocodile
recipe
River.
for it's noise.
You're,
Exactly.
you're trading inside the noise. So
Yeah, and so that you know, I did take and you'll see it later. I took another trade this afternoon, so I made back my losses of Friday plus a
Good.
little bit. So we're good.
Yep.
Good.
Okay, so Rad, just PSR flips. Now this is fine, short, and then exiting, and then I'm gonna say, where's my re-entry? I love this PSR flip. Buy it. I like the rollover exit. That's good stuff. You know, I don't mind this one. This one pays for that one, and you like to finish the day up. I don't mind that. You know, otherwise you were going to get out here instead of here. I don't mind that exit. Psychologically strong to exit there. Now, if the OR3 is large, you can never have too big of a range. It just means it's in play. In fact, that's even more reason to trade it. So then you could actually get it here with a stop at the PSAR and then just ride that whole thing and exit where you got short. And then your gain compared to compared to this risk would be about +1, when this one would be, instead of a -1. See, here's the point I want to make. If you use that as your 1.0 or a 0.3, then this is not a -1R. I mean, that's such noise. But on this one, you would have been long from here and exited there. And so if that was -1, that was potentially, this was 6 of those little red boxes. Contemplate that for a while. There's something weird in the way your PSAR is not printing. It's stopping here and starting there. I'm not sure why. But I like that, and I like getting paid. I like the re-entry. You gave it a full move back, and then correct. I like that. I would love to see that re-entry on a collapsing dragon. Gets paid. I like that one. Dragon exit. Nice. That's your maximum favorable exert. You wouldn't lose money on that trade. And you might have been able to pick up something on that. But still, when things calm down in this breakout, you shouldn't lose money on that trade either. I like the PSAR flip. I like getting paid. This would be like a OR3 or a Z3 breakdown. I like this one. That's pretty good. I'd like to see get short. I like getting short there and a quick cut. That's fine. So just for thoughts, if that's your PSAR flip and AMD, let me just, if you can just bear with me half a second here, I want to see what the AMD's range stat is $6.40, and his R10 is 60 cents. So let's see if we can draw a range stat on. Here's the size of the range stat from 114 to 120.60. That's the size of the range stat. And 60 cents, even if we just called it 50 cents, is about this size. So that's the size of the R10. So the PSAR flip was an R10. And if you position size against the range stat, and then if you get long right here, and you use the PSAR flip as the hypothesis, and the hypothesis is that you have rising lows, you could seriously think about getting long here or here on a COTA 2, and you never, and if any of this breaches, you end up taking a minus 0.1 loss, and you have a collapsing dragon trade short. So my argument is that there's probably a trade in here somewhere. Otherwise, this is the price that would get you out. And maybe the OR3 is an entry here, or a MMRB. Shouldn't lose money on that one. I'm not disagreeing with those trades, but I just feel like those are large losses, which are psychologically costly. And if you just position size with real money off of the range stat, you're going to be glad you did. PSAR flip, short. Oh no, I'm sorry. PSAR flip, long. Fake one, go to. So not necessary to take this one. You could, I don't mind this waiting for the collapsing dragon. I like that. I love all of that. And I love this as an entry because you have, there's like a 0.1 risk if you are position sizing against a full range stat. And then you just keep this guy. Remember, that's the price that gets you short. And now this exit can be a stop and reverse. And here's a COTA 2. So if this got you out, then this would get you back in as you're getting the Z3 starting to expand. I think there's more in there for you. I love this short, by the way, because it's already collapsing dragon, and it's deep into the sideways channel. That's worth a shot. But that's a fake 1 and go 2 all day. It's even better because you made money on it. Remember the idea behind a fake 1 go 2 on these Z3 pinches. Is that it's been in that channel a long time, and if it's threatening to break out of the Z3, and it starts here, and you get a collapsing dragon pattern and a kata 2, right? Because you got lower highs. That is a perfect entry inside the channel. And it's getting ready to leave the Red River, and it's in the winter. And that's the move, which you got. And now it just had a harsh winter, turned to spring, and is now crossing the Red River. And here's where it goes into summer. Both of those are positive signs. So this is saying somewhere in here or somewhere in here, there's legitimate entries based on that changing of the seasons. And then you have resumption. If this got you out, then this should get you back in. And then there's that. NVIDIA 2.5R. Here's all the things I love about this one. Harsh winter. Winter, spring. Turns to spring here. I love that entry so much. And if you're position sizing off the range stat, remember, that's a minus 0.1 loss. Then this crushes it, and then the re-entry is still good, and you get out at a perfect time. This one, I think, was pushing it a little bit, but after a nice move like that, I like that. That thing is in play. I'd give it one more shot. You managed it well. This one, maybe that was extra, and you're hoping to get a 50% retracement. If this was abnormally big, you hope on this trade that it gets past Z3 and then halfway down to here, and then that would be a great trade. But you got out of it because it didn't fail. I would make that a stop and reverse. And now you get paid all the way here to the PSAR flip. That's an entry right there. After the second leg down of a harsh winter. So that's good trading there, by the way. The way you did it was good. Super pinch, gap up, you guys are all abnormally quiet. I hope this is still recording. All right. That's a special move. This would be the dragon exit. That would be your kata 2. Now remember, your exit for that would be here. So you could afford a tiny little risk as long as you were committed to honoring that. But the idea is that don't get out inside. Wait for the breaching of the PSAR. Don't get outside inside this noise. Like an exit here, like if you got long here, that would be a noise exit. Just commit to taking a minus 0.1. That's a great trade. That's a great trade. I love this one. I still like that one, and I love all of these. That's just nicely done. This is the point I'll make. I'm not going to go through all of these. It's getting a little bit late, but all of this is in the noise. If you're position sizing, that's just a frog box, I think. So your range stat is huge. So you're getting a lot of furious activity inside the noise, and this is coming at a cognitive cost. Because remember, when you're making all of these trades, you're not managing any of the other trades because of span of control. And the point I want to make is that after this PSAR flip, look how good the PSAR is. And look how good the PSAR is. So that was excellent. And here's your Z3 breakout. We could get that. It's already out of the Red River. In fact, the point I'll make here is you got this range compression. You're in a super pinch. That's the whole point, is to catch a Z3 breakout. Look where that's happening inside your MACD histogram. These pinches are reflected in how tightly compressed the Red River gets. And now this is where it breaks out. So I love an entry right in here, because my risk box, even if I pick the Z3 as my line, say if it breaks out of the Z3 this way, then I have a Z3 breakdown. And then, or I could come all the way back to here and say that's going to be my execution risk. And if this is the size of your frog box, there's certainly 2 of those available to the upside. So an entry here, and then trusting the PSAR until it flips. We'd have saved about 6 trades and a lot of cognitive effort. All right, that's everything I got for tonight. The chart, the daily report is posted. I'm not going to go through that because we spent a lot of extra time on the lessons, and so I want to give you time to prep. I'd replay this one multiple. I'd make a note to self, replay that. By the way, if you can make a playlist on your YouTube, get a YouTube user ID, and then make a personal playlist. And you could share that with your accountability partner. In fact, if I was you, what I would do is I would make a playlist, and then I'd list them, and I'd say why. And then if you got something like Wondershare for under $100, you could download those videos to your local machine. Just saying. All right, that's everything.